Apart from the earnings that are coming out at the moment and through this week and through next week, and especially the tech stocks next week, the apart from that, they always chuck a little bit of a spanner in the works because we don't know what's coming out the gate in most of them. And the other main point really is that the markets are looking quite sort of bullish, but when I go through all the stocks, I can see that some stocks are bullish, and we could say, yeah, well, the market's bullish, and then we look at some of the weaker stocks that would be like Alphabet here, that takes up a fair bit of this particular indice, and they haven't really gotten off their bottoms here. They're a little bit like the SP500, so to speak, and also the Russell is another one that can't shake off the bear market side of itself. So yeah, look, when I look across the markets, is that I see plenty of bullish stocks, and I see bearish ones as well. So now I'm just using this one as an example. Okay. So in this instance here, we said to ourselves, okay, so we've got an A wave off the low here. We could put a B wave here, and then we could put a C wave here for that. That would be a corrective pattern at that point. But then we noticed that we end up having 1, 2, 3, 4, 5 here for 5 waves to this point, and then a correction, then down again. We thought, oh, well, that's corrective if that top gets taken out. So that top gets taken out, so that can't be an ABC at that point. So we've got to lift it up to the next level. And lifting it up to the next level here is a little bit like what we need to do with the NASDAQ and the SP. Now, we know that we're bullish for the short term. So we know, because this is corrective, we know we'll take out the top here, right? We could count this up as 1 here and 2 here. We could go 3 here. It's a bit short. We could go 1 and 2 again here and continue to move up. So there is a bear, we have to move. If we're going to be bullish, we have to understand the weak point within that bullish move. So the weak point in that bullish move would simply be, well, we need to take out the top here. This is one of the weakest, so this is what we could use, as an example. So we would need to see 5 waves up here. And then when we get to this point here, this is after 5 waves here. This is a point where we can come down at this point and make a new low, because it's come back up to its thingy here, 50, 60% from the top and all the rest of it. So, but that doesn't mean that it's bearish, and it doesn't mean that this is an ABC for the A wave, the B wave, and a C wave up here. We could also look at this being bullish as well. We could look at this as being, wave 1 here, and, where's the wave 2? Can't see what wave 2 here. We could look at this as being wave 1 here and wave 2 here. Is this behaving like a third of a third? Possibly, maybe not. It should be a little bit stronger in the middle here, but yeah, so, it's I'm finding them a little bit sort of iffy at this particular point. But all I can say to you is that, yes, in the short term, we can be bullish on the indices and stocks. And but we got to get past a certain point here before we can say, we're going for a moonshot and we're taking out the tops here, because that's just not a reality at the moment. It's not in terms of Elliott Wave, and obviously you chuck a couple of Elliott people in the room, you're going to come out with different answers. But from my humble perspective, is that I try to be not influenced by being bearish or bullish. I just try to gather the evidence the best that I can. And all I can say, all that I do, if I know something, then I'll say it. If I don't know something, then I'll say that too. So I don't know if we're in a bullish market or we're in a bearish market. There's cases across the whole stock market area to suggest both of them. So I have to go step by step. And all I can say in the short term is that, well, we should be pushing higher for the short term. So that's really what I can offer at this point. Okay, so all I can do is with the indices and the stocks that we've been looking at is track the current intraday moves up to the upside. And when we get to the top, when we count 5 waves up, like 1, 2, 3, 4 here, and then we go to 5, and we can say, well, that's the top, we have to be careful at that point, and that will be the same when we get to this point here. Now, I'm just using this as an example because, it's, as I've mentioned before with a lot of the stocks, some of the stocks, are way up top here type thing, so in those cases, when you have the bullish moves, they will come up, they're way up here, for example. So when we get to the top here, these stocks here, they could have a move to the downside here and make new lows, where these ones that have come up quite high here will just have some sort of ABC pattern and then move up, and they can be bullish from that point, you know, but they both have that. They both have that, you know, move here, but they're just different, that's all. So yeah, I mean, that's just the way I see it. So anyway, that's what I just wanted to put forward on that. Yeah, I mean, it's, you know, we'll get to the Dow Jones, but you know, when you look at the industrial sector, why we're looking at sectors here, the communication sector and this sector, I mean, this has moved way up here, you know, and we got 5 waves up there. It's not like I could look at this as an A wave here, then an A, B, C, and have a top in here, because we've got this move here. You know, on the Dow Jones, we didn't make a new top across the top here for that, but we'll take a look at that. But all I'm suggesting here is that, you know, are we going to have 5 waves up here? 1, 2, 3, 4, 5. And is that going to be, you know, the thing is that going to be 3, 4, and 5 to here? And then we go down. So all of this becomes some sort of A wave, B wave, and C wave to here, and then come down at that point. You know, there's a fair bit to go on, really. It's only when we have these 5 waves here, right? And then we have some sort of ABC back here. And then a move, if we have a move up there and we can go along here, so to speak, then we know we'll get another 5 up. So there's certain points along the way that we know shit, and other points we got no idea of what's going on. You know, there'll be blind spots, but yeah, it doesn't hurt to talk about these things. So I'll just pop these back over here. So for the SP 500, so if we were looking like the communication sector for a moment, and we know that with the communication sector, we were looking at it coming back up into this space up here, and that's going to be a problem area here. You know, it's not like we can count this as 1, 2, 3, 4 here and 5 up here, because the wave 4 is overlapping wave 1 here. So it doesn't work that in 5 waves up here. If it did, that would be nice, but it's not the case. So we've got to be careful about that box. We need to translate that box area to pretty much everything else, you know, and we have to understand that. So in this case, we could look at this as the A wave here, and A, B, C for the B wave, and then up for the C wave here to the 61.8% or whatever it is up there somewhere, right? And that could be a problem area. But in the meantime, we can push, you know, as we've been saying, we can push up here. You know, I've been calling it the splash page on the front of the video, bullish or corrective rally. You know, I thought of like, shit, what do I call that? You know, I need to make up more splash pages. That's what I need to do. But anyway, so this is a possibility of having a B wave up here and then having a C wave down here and then moving up from that point. Now, the other side to this, of course, is that, yeah, we could be in a bullish, you know, in a bullish pattern from this point. You know, we can look at this being wave 1 over here and wave 2 over here with an A wave, a B wave, and a C wave, and then looking at this moving up here as 5 waves. We're just tracking 5 waves up here. So when we get to the 5 waves up here, right, then if we'll have a blind spot for a moment, but we'll know where we are intraday, of course. But if we have some sort of ABC back at that point, and I'm just saying that would be the safe trade at that point, if that was breached, then we know that we'd be going up further at that point. But it's hard for me to look up here, you know, to be quite bullish up here, because of when I look at the Russell, you know, the Russell's quite sort of bearish in that instance, and maybe we should just have a quick look at it while we're shooting the breeze here on this one, because it is you know, we've got to kind of bring little brother along with us, you know, as much as you may not want to. But see, with this particular market, the Russell here, this is just a daily chart. We can count it down from the top as as 1 and 2, and 1 and 2 here. That could probably come over here, but doesn't really matter. 1, 2, 3, 4, 5 here for the third, 4th, 5th here for the third, the 4th here. It's a bit high, but it doesn't overlap wave 1. It's cool. And when you're working with large numbers, the market gets pulled back to those numbers. So 3, 4, and 5 here. So it does present a 5-wave structure down here. Of course, you could count it as an A and a B and a C wave down here. But the thing is we're not really getting 5 waves out of this. And because this low here broke this low here, it kind of makes it a bit of a wounded duck, really, because You know, I suppose it's just I mean, it's just a better count as an A, B, C pattern here. That's all. Do you know what I mean? It's hard to get this here as wave one here, an A wave, a B wave, and a C wave here. It's possible we could plonk wave one here, and wave two over to here. It's doable as an expanded flat. But it's a bit of a long shot at the same time, you know. It's really got, well, we can count 5 waves down here. This does look corrective here. Putting 1 and 2 over here it's you know, it's possible, you know, but it's just, you know, there's too much weight on the bearish side for this here. I mean, we could look at this as a triangle. You could rearrange this down here and look at this as an A wave, a B wave, a C wave, a D wave, and an E wave here. But it would still come back up to where wave 2 is at 1900, because if we take, and I'm just looking at this because it's one of the weakest, you know, if I took this down to this level here, it'll come in at 38.2% retracement level for a triangle as an A, B, C, D, E here. It'll come in at 19 there. And if I take this to here and here, for example, the length of this here by calling it wave 1 and 2 at this point, then we still come back to the 1900 roughly at the 61.8% here. So it's kind of the 1900 there. Now, how far will we go up into that particular space there? You know, will we get up? You know, how far will we get up there in all of this? You know, this is a B and a C here. So, you know, we will, while the S&P is climbing higher and the banks are reporting, you know, good stuff, well then, you know, we'll see that push up, and you know, that's 5 waves up here, that's 5, all of this is 5 waves moving up here. You know, from this A wave here, we've got 1 here and 2, that's 5 waves, that's 5 waves here. We're sitting at 8. It hasn't retested 1800 here as the support yet, but we'll talk about this when we get up there a little bit further in all of that. But all I'm saying is that yes, we're bullish, but there is a problem ahead. That's all I'm saying. And I don't have any answers for it. But when I look around, like things at the Russell, there is that weakness there. And, you know, got to kind of look at that a little bit. So looking at this as bullish or bearish here, or having an opinion about, I just don't see, any, I can't figure it out at this point. I can't give a solid answer. If I don't know, I don't know. And you know, one of the hardest things to do is to tell yourself the truth about something. So if you're going to say something, you've got to make sure that it's, you know, you've got to be able to back it up, you know, to some point. And I can't back it up at this point with any of this, you know. You know, I look at the fundamental people, you know, all the top big investment people and other fundamental economists and all the rest of it, and you know, they've all got different opinions about it as well. You know, I mean, they're all thinking it's the end of the world, so that makes me think that it's bullish, you know. So yeah, been around long enough to see that sort of stuff before. So, but anyway, enough waffling. So yeah, look, the main point is not to sort of, for me, I don't know if we're bullish or bearish, but my job is just to track this up through here. You know, that's really what we're doing at this particular point in time with this. So I'll just go to 20k here on the sort of bullish side. There's a couple of different ways we can view all of this here. So this is just a bullish count, but don't take any, you know, don't take this wave 1 and wave 2 here as anything, because that's, you know, it's just BS at this point. You know, we don't know. We have to go, we get 5 waves up, and then if we get a corrective move, well, then we can go up. We don't know that yet, so we can have a top up here. Obviously, there's, you know, some of this work here is a bit tricky to count, and there is probably different ways to count all of this as well. So yeah, all of this, and it's a little bit messy in here as well. I mean, one of the good things here, as mentioned yesterday, is the 4,100, you know, really gaining support here for that. And now we've got halfway between, this is all minor group 1, 1, 2, and 3 here, really simple. The halfway mark between 1 and 2 is the most important here. So the 5 here at the moment, there's different ways to count this up. We can just have a little look at a few here. So this is it's pretty much the same, this one here, really. But Yeah, this can be counted differently here, but this here would be 1 and 2 and 3 and 4 and 5 up here, then the ABC. So I think that's okay with that. And, you know, in one of the other charts, we're putting wave 3 here and wave 4 here, but it's all a little bit squashy, not happy. So we probably need to look at that as wave 1 and 2 here for this. So we'll just cruise in there and look at that a little bit more. So okay, I've counted it slightly differently on this particular one here. What have I done here? Oh, okay, I've counted this little area different. The reason I've done that for is because the NASDAQ is like this. And it's not that the NASDAQ is, you know, got more weight than this and all the rest of it, but a lot of the tech stocks like Apple and so on, we looked at this here as being a particular, all on that particular date, the 29th of March, all being at the end of the correction. In this case here, it was just that it didn't pull back very far, so it doesn't look, you know, doesn't look right here. So, but you know, obviously we'd look at it as 1 and 2 here as well, and 3 and 4 here, and so on. And but anyway, the main point is that you can see the closer we go in here, the more that, you know, we've got support on the closest largest number, and 1 is the strongest number. So according to me, let's just go into 1000 ticks here, and I don't think I've updated this, but it's all playing out pretty well, really, I guess. So yeah, it's just let me see here. I've got this counted. So I've had this as 1, 2, 3, 4 here. I could probably put that over to here, and I could probably move that across here further. But I think I'm pretty happy with 1 and 2 here, actually, and then 1 and 2 here. And I could move the one thing I need to work out is, do I put wave 2 over here for that? That was something that we need to work out. It'll come out in the wash anyway. It's either 1 and 2 here, and it kind of don't matter because we'll see this move up. You know, the only spanner in the works when we get into these intraday positions is the earnings coming out. So you know, I wouldn't sort of be over trading at this point, but certainly we're still looking to the upside with all of this. So it's really just very small positions, and don't forget to breathe, you know, and keep wider stops. So I'll leave the S&P at that. We are seeing a low in the dollar as well, actually, by the way, but we'll talk about that in one of the other videos a little bit later. So this is one of the bearish counts we had for the NASDAQ, and we can pretty much rule, well, we've already spoken about this, I'm sure, but we can pretty much, this particular pattern that's coming down here is, well, let's just have a little bit of a look at it. We've had 5 waves here, so the pattern as a top could play out here. And then we've had this situation here where all of this here, we can look at this as 5 waves down here. We could look at an A wave here, then an ABC for the B wave, and a C wave up here. So we can negate this pattern once that, I don't know if that spikes on the cash market or anything, but as soon as that top is taken out here, then we can dismiss this particular pattern here for that. But that means, it doesn't mean that it's over at that point, the bearish pattern. It just means that we need to go to the next spot up here, that's all. And we'll need to rearrange all of this in some way or another. I've probably looked at it somewhere along the line here, but it'll be something like this. So plenty of upside at this point. I'm not sure if wave 1 and 2 is here or wave 1 and 2 is here for that. I'll just leave that there. I'll just see what I've done on some other charts. But it doesn't really matter at this point. Let me just go into the bullish side here for a moment. Well, this is the bullish side with 1 and 2 and 1 and 2 here. Not that I've got 2 here, but you know, but this is, you know, this can be just BS as well. So I wouldn't choose anything at the moment with all of this. You know, sure, we can look to the upside here. This could also be counted a little bit differently in here as well for this. You know, we could probably put wave 4 over here for that too. And then have a more of a severe, but in the meantime here, this is, if, as I mentioned yesterday, if that top is taken out, we could go long from that point, but now we can drop it down to this one. And this one here, I mean, it's still bearish because we've got those 5 waves here. So we need to be as an A wave, a B wave over here, and then a C wave down. So, but we've got a corrective pattern in here. So I think that we're okay at this point. You may be able to get a better position here. So this little 1 and 2 here and 3 here, that will probably end up being wave 5 here, and then some sort of little ABC pattern here, and then going up from that point. So you should be able to bring that across here. And also too, really, you need to be using the trading levels at this point. So because you don't, I mean, it's okay when I say take out the tops here, that's fine, but you need to refine what you're doing further. So we've got above 13,000, we've got 100. 1, 2, and 3 is group 1. So really what you're looking for here is a classic trading levels pattern to go long on. So you can go long above the B wave here, or a classic trading levels pattern coming in there. So you know what that looks like. It's like this. So do we have the first high above the level in here? No, we don't yet. See that little first high here? So we're looking at 1, 2, 3, 4, 5. So we've got the arrival, we're in the reaction now, then the first high above the level, then the ABC pattern. So over here, we're just at the arrival at the moment, so we're going to get the reaction, and we still have to wait for the first high above the level. Don't chase the breakout, and then the retest will come into play, and then you'll get this little pattern in here, if you move in close enough, will be the same as this bigger pattern here. It's just another fractal. So it'll be the arrival here, the reaction here, the first high above the level here, the ABC pattern here. If you can see 5 waves here, by the way, it's clear as a bell. You can buy the, buy the 50-60% retracement here, level back. This will be a 5-3-5 structure here as an ABC pattern. So if you want to get in there and count that, you can do that too. So anyway, the idea would be to build in through here, to the upside. We can see here that, what's actually happening here, is that it's trying to find support on this level here. It's come up and it's dropped through here, and it's had a bit of a battle. Most of the time it's been spent under it, but now we're spending most of the time on the top here. But it hasn't proven to us that it's made new highs yet. So it hasn't made a high above here. It hasn't made a high above here. It hasn't made a high above here. And it hasn't made a high above here. So it's at risk. It can come down from that point. That's the reality of it. Okay. So you want the market to prove to you that it's strong. So it needs to take out a previous high in that case. Alrighty. So I'm going to move that to the side. That brings us over to the DJ here. So we were talking about this, were we? Let me just go back. Let me just go back to the daily chart here for a moment. Okay, this is where we're talking about. We'll just start again here. Oh, we normally talk about the Russell at this point, don't we? So I will just go back over the Russell a little bit in a bit of detail just here. Let me bring that up. There we go, the Russell. So all I'm seeing here is impulse waves up here, an impulse wave here, and an impulse wave here. It's at the 18, which is part of group 2, the 65, 72, and 80. So it's being held in there. It's really, if we go back to the 20 ticks, if we go back to the daily chart here, and we talked about this being bearish, but what also happens as well here is just why we're in the bigger picture, because we talk about this in smaller time frames a lot. So this is 1, 2, 3 here. This is all minor group 1, and this is minor group 2 here. So when you're at whatever number, in this case 2000, you have a look at group 1 above and group 2 below, because that's the swing range of the correction that can occur at this number. If this here becomes the 65 becomes the retested resistance, then you know that it's leaving this number and be pulled down to the 5 at that point, the 15 here. So it really still belongs to this number. It hasn't let go of it here, under here. Do you know what I mean? It's still there. It's just that it's difficult to work a bullish pattern from this point. That's all. The bearish pattern really has more dominance here, and now it's created this high, came down, gave us a corrective pattern and created a lower high here. So that also makes it bearish as well. And now it's come down and it's a reasonable impulse wave here, you know. You could probably get a corrective pattern out of it because it's pretty messy in here. You could sort of, you know, skew the envelope a little bit, but as it stands, unless this high is taken out here, you know, we really need to be sort of considering it to be a corrective rally here for the time being, at least anyway. You know, there's more weight to the bearish side than the bullish side for all of this. It's not to say that it can't be bullish. It's just that the weight of it, you know, the only thing that's got going for it being bullish is that this low here is still above this one, but it's not a lot to go on, you know what I mean? It's grasping at straws, but it doesn't stop us from being long here. All we know now is we know that, you know, when we come to a level like this here, we'll go back to the 20 there, it's not like popping its head up here like above the level is not support, is it? It's just the first high above the level that you'd use as a reference point to go long. In this particular instance here, we are seeing impulse waves here, so we should be pushing up further. So the first high above the level might be just quite brief, if that's the word, you know. So it might not be a big deal, but on the intraday basis, it should come back and test it at this point. So I do see it going to the upside. All I'm saying is that we don't have a tested support here yet. We may end up, you know, when we talk about the support, if this was the 18 across here, we're looking at a first high coming up here, another high coming up here now. So it needs to come back and test. It doesn't, in this case, because we're getting a lot of impulse waves over here, we may not get this move back below the level here. We may get something a bit more simplistic like this, the trading levels pattern 2, which is, it's not rare. It just doesn't occur as much as this one, you know. This is the most common pattern at the, you know, with the markets, and then this one is second most common, and then this one here where it doesn't stop at the level over here, and the distance it goes above will be the distance it goes below, and eventually that number through here will become the balance point, and if you're patient enough, you'll be able to pick it up over here. But so I think it's kind of probably something like this, but it may dip back down a little bit here. But all I'm saying, it should be quite brief, because I know that that's an impulse wave here, that little guy here, and that's an impulse wave here. So it's going to be pretty much short-lived here. It'll be, if it's going to correct, it's going to correct this one here. So it will be 5 waves up here, and then some sort of little ABC pattern here, and then a push up at that point, you know. So you've got to kind of find the top and go long on those particular tops there for that. But it's better if you wait for this one and not chase this one. Let's just go into this one here for, just get a clean chart here on 50 ticks, and we'll just sort of pick that up there. So there's our 1800. And here we can look, I won't label them, but I will label them in this sense. That's 1 and 2. That's 1, 2, 3, 4, 5, third wave, fourth, bit scruffy in there, but we'll just say that. So we already got wave 1 in here. That's 1 and 2, a nice ABC pattern. That was the long trade here, the safe long trade for the first position. But obviously there's hindsight, but hindsight's okay. So I need to pull that apart there. It's not jumping out at me, but you know, it'll be nice if this, it should be pulled back here. It could do anything like this, but all you need to do is just wait for this high here. It's the end of the session now, so it should get sort of sold off a little bit, and just wait for that, and then you can have this one here and then back up at that point. So you're really just waiting for it to settle in there. Yeah, it should come down and test this this 1790 area here, 1795 area here, where all that support is there. So really just kind of looking for some, you know, some top here that, you know, that you can go long on. Where it's moving into plays, it just probably won't have a big correction like the other markets. So I'll leave that at that point. And then the Dow Jones, you know, this is completely different from the Russell, isn't it? You know, it's you know, pushing up nicely here. on the cash market, we can, even though that this is the high here, this is on the, this Dow Jones here is a CFD product from IG Markets, and I'm not recommending IG Markets. I don't like recommending things, and I don't mind suggesting things, but I don't take money for sending people here or there or any of that bullshit. So, you know, in Australia, because I think if you open up an account in you know, any brokerage account, you want to open it up in your own country and as closest to your home as possible, because if there's a legal issue, then you'll be in that jurisdiction and not some other jurisdiction. Do you know what I mean? That's step one. And step two, you don't want to trade with anybody that actually trades themselves. You want a broker just to execute trades. If they trade for themselves, well, that's where all the brokeraging companies get into trouble. So never do that. You know, I mean, I know these CFD providers, they will hedge positions with other CFD providers, and they've got accounts there and all of those sort of things. But they're not, you know, they're not playing their own game. They're playing the brokeraging game, and that's really what you need to do. You know, it's not, you know, you'll either go into book A or book B. If you go to book A, you'll be hedged. If you go to book B, you won't be hedged, and they'll take on that risk. But I think IG pretty much hedge everything that's going on in one way or another. So anyway, I'm just telling you what this charting, because I like the charting program. It's actually a third-party app from a French company called Pro Realtime. And yeah, I just like the functionality on it, and I use it for the videos, and that's that. But as a CFD product, it's got the cash market and the futures market tied into it, because it trades around the clock, so to speak, pretty close. So the cash market will look different. If we look at the cash market here for a moment, you'll see that on the Dow Jones here, can you see, yeah, that's all in the frame a little bit there. I'll just reframe that in here a bit better. So in a nutshell here, you can see that this B wave here is higher than this one over here. But in the other one here, this one's got that little spike there. So to get this A, B, C here, I've taken it as 1, 2, 3, 4, 5 off the cash market. That's what I've done here, just to let you know that. So, yeah, the thing here is that if this is 1 and 2 here, which is a pretty good case for that, then we can look at this being wave 1 and 2 here, and this would be 1, 2, 3, 4, 5 of the third wave, and the fourth wave would be in here somewhere, and then we'll get the fifth wave. And if we, just to, you know, humor me for a moment, because if we do get 1, 2, 3, 4, 5 here, right, and we take out the, well, if we get 5 waves here, we're going to get another 5 waves over here. It's not going to end in 3 waves, so that means we'll get 5 waves over here. We're going to get 1, 2, 3, 4, 5 over here. Now that could be the top of the B wave over here, and I'll, instead of wave 1 here, I'll look at that as the A wave, the B wave, and the C wave over here. You know, that's doable at that point. Could I just get 5 waves to here and bring that down into here and have this as an A and a B and a C? A little bit sort of dodgy in terms of the relationship between this leg and this leg, but we'll keep an eye out for it. You know, the safe trade will come above the B wave here for that. But yeah, in the meantime, we're just looking at this moving up here in 5 waves, and yeah, so that's it. So I mean, this is a case for you know, a bullish market really in all of this. So I'll just go, I don't know what I've upped. Sometimes I don't update everything, you know, sometimes I do. So we had this move up here as the A wave, the B wave, and 1, 2, 3, 4, 5 up here for the C wave here. Once this top here gets taken out, right, then we can look at this C wave of wave 2 here. We can, you know, put a cross in that, and I'll put that back there. Just leave it there for a bit, just in case that doesn't get taken out, you know. The wave 4 here, you know, I can get 5 waves out of this as 1, 2, 3, 4, 5 here. So looks a little bit, so, you know, maybe it will extend up further, but you know, and I could extend this up further as well. It's not a problem, but we've got 1, 2, 3, 4, 5 there, so we could look at it as 1 and 2 here or something, but we should get some little fourth wave here for this. If you're going to trade this long here, 34 here is the closest largest number. Also a good little number. You know, I don't use it much with the trading levels, but the trading levels come from the Fibonacci sequence as a price ratio, and 34 of course is, you know, 8, 13, 21, 34, 55. So it's when it's in bigger picture format like this, it can become a bit useful, but it's a big number, and you want to be looking for a setup, and the setup will be a classic trading levels pattern here. So we're a long way off having that at the moment. We've just got the arrival here. We're in the reaction. We don't know if the reaction is going to give us this. We don't have the first high above the level that we need. We don't have the ABC pattern over here for that. You know, we don't have, there's a lot we don't have yet. Do you know what I mean? This trend really here has not really been rebalanced at this point, you know, so you'd only be buying into supply at this point. I'd suggest going for some of the other markets at this point. Alrighty, I'll leave it. Sorry for waffling on for so long, but that's that. And yeah, I mean, just to recap, you know, the NASDAQ here needs to take out this little top in here to prove that it's bullish, to move away from this 5-wave move here. So taking out that top will do that. It'll take a little bit more wingling to do that. So that would be the safe trade above that. The S&P looks a little bit more perkier because it's got, still need to be a little bit careful here, I guess. I mean, if I looked at this, which is, this is going to be a little bit weird, but looking at this as, yeah, just not going to, I'm not even going to say it. It's more bullish than bearish. I'm not even going to mention it because I'll just look more stupider than I actually am. So I'll leave all of that. And I bid you farewell. Thanks for putting up with me. Cheers.